Okay, so we're going to do problem 16-5B. Your assignment will be problem 16-5A. So it says the balance in the perpetual inventory accounts of Valley View Manufacturing Company at the beginning and end of year, current year, are as follows. And so they give you the breakdown of the three inventory accounts: direct materials, work in process, and finished goods inventory. And then it says total dollar amounts debited and credited during the year to the accounts used in recording manufacturing activities are as follows. And so they give you the accounts: materials, inventory, you've got debit entries and credit entries, direct labor, manufacturing overhead, work in process inventory, and finished goods inventory. And on some of them they give you the numbers, and of course on some of them they don't. So we've got to figure out what those debit and credit entries are. And so it gives you these instructions: using these data, state or compute for the year the following amounts. I would prefer that you compute so I can see your work, please. All right, so first thing they ask is for the amount of direct materials used. All right, so you've got your debit entries there, and one of the debit entries for materials inventory is for $225,000. Well, the reason you made that debit entry is because you purchased direct materials of $225,000. So the answer to one's really simple and doesn't require any sort of calculation or computation. It just simply is $225,000. So the answer to one is $225,000. Okay, that was easy. Next, they ask for the amount of direct materials used. And so if you look back at some of the things we did in our lecture, here's how we get to the answer of what direct materials used, what that number is. And so direct materials used is the following. It's your materials inventory beginning of the year. That number is 25,000. To that you add your purchases, and I'm abbreviating and in some respects just using the beginning letters. So materials inventory beginning of year. To that we add the purchases of direct materials, which we know is 225,000. So that total is 250,000, and that's going to be your cost of direct materials available for the year. Okay? And from that, what you're going to do is subtract your materials inventory end of year which is 15,000. And so what you come up with is your cost of materials used. So that's $235,000. Okay. Number 3. Here they're asking for the payments of direct labor payrolls, and if you look back at your entries that have been made, what you have here are under direct labor, you have a debit entry of $200,000. And the reason why you have that, if you recall, direct labor is an expense account, okay? And if you recall, expense accounts, when you're incurring an expense, you debit that expense account. And so that debit entry of $200,000 is your direct labor cost, or excuse me, your payments of direct labor payrolls. That's your expense for the year. Now this one's kind of difficult. Next they ask for the direct labor assigned to production. Well, that credit amount of $210,000 means if you conceptualize this in the form of a T account, you'll understand this. This direct labor, just draw a T account for direct labor, and we'll do that kind of over to the side. You know, you've got probably an end of year direct labor amount that goes over to the beginning of year direct labor. And then you incur $200,000. At some point, what's going to happen is you're going to take out whatever amount that you need to put into production. And so if you remember, this is the work in process, and one of the amounts you're going to put in work in process is your direct labor. Work in process is going to include direct materials, direct labor, and factory overhead. And so one of those figures is going to be this $210K that we see in this debit amount of $210,000. Okay, so 210,000 is the answer here. All right. Moving on. 5. Overhead. Now, we didn't talk much about overhead, but let's, and we'll talk about it more as we go along, but just kind of give you an introductory here. Says that the overhead assigned to production stated as a percentage of direct labor cost. So notice that your manufacturing overhead's $420,000, and that the amount of the direct labor cost that's been assigned to production is $210,000. And so what they're asking for in this case is how we state this percentage. And so it's very, very simple calculation. If you don't quite understand this one, that's okay. We will get lots of practice dealing with overhead. And so what you do here is you take your overhead assigned for production, which is the $420,000, and you're going to take and divide that into direct labor cost assigned to production, which is 210. And so notice here that the overhead assigned for production is exactly 200% of the direct labor cost assigned to production. Again, if you don't quite understand that one, I understand, but by the time this course is over, I guarantee you will understand what that means and why this is done. All right. Again, we're just trying to introduce you to some of these concepts, and we're just kind of throwing you in the water. And I can't think of any other way to do this. All right. Now let's get to some stuff that you probably will understand, hopefully. All right. So next, they're asking for total manufacturing costs. And so the total manufacturing costs for the period are the direct materials used during the period, the direct labor cost for the period, and manufacturing overhead for the period. Well, we've got all those numbers, right? We got those from our past calculations, and some the overhead amounts just given. So let's put in our numbers. Direct materials used is $235,000. Direct labor assigned to production, or direct labor cost, is $210,000, and then the overhead is simply a given number. So overhead assigned to production is $420,000. So that number is $865,000. And that's your total manufacturing costs. Okay? Number 7. Here they're asking for the cost of finished goods manufactured. Well, recall we have our finished goods inventory of beginning year 30,000. Excuse me, I'm in the wrong area. You have work in process beginning of year of 8,000. You have end of year work in process of 10,000. And so you're going to take those numbers as well as the total manufacturing costs to come up with cost of goods manufacturing. Okay, so I'll just say CGM, cost of goods manufactured. Okay, so work in process, beginning of the year, WIP/BOY equals 8,000. To that, you're going to add manufacturing costs, which you've already calculated, of $865,000. And so that equals the total manufacturing costs of $873,000, and from that you're going to subtract your work in process end of year, which is 10,000, to come up with cost of goods manufactured of $863,000. Okay? I think I need a new sheet of paper. So let's get this lined up. All right, so the next thing they're asking for is cost of goods sold, CGS is what we'll call that. And so here, what you're going to do is go to your finished goods inventory, and you're going to use the beginning of year finished goods inventory, as well as the ending finished goods inventory number. And what you're going to drop in there also is your your cost of finished goods manufactured, the number you figured out in number 7 to come up with cost of goods sold. All right, so we start with beginning year finished goods inventory of 30,000, and you're going to add your cost of goods manufactured that you determined in number 7, which is 863,000. And so that number is 893,000. This is called the cost of goods available for sale. We'll call it CGAS. CGAS. That sounded kind of foul. CGAS of 893,000. And from that, you're going to subtract your ending finished goods inventory of 24,000 to come up with cost of goods sold of $869,000. Okay? Next, question is, the total amount to be classified as inventory in the year-end balance sheet. Okay, so they're asking for total inventory at the end of the year. So that includes your materials inventory, work in process inventory, and finished goods inventory. So those numbers are just given in the problem. So that's not a big deal. So we know that end of year, so we'll call this total inventory. And we know that materials inventory end of year is 15,000. We know that work in process inventory is 10,000. And we know that finished goods inventory is 24,000. So again, the numbers are just given to you. So What do we have here? $49,000 is your total inventory. Okay? That was easy. Next. Here in B, they ask us to prepare a schedule of the cost of finished goods manufactured. Okay? So, what we're going to do is we're going to start out with our work in process inventory. We're going to use the work in process inventory at the beginning of the year, the work in process at the end of the year. We're going to take all those manufacturing costs that have been assigned to production during the year, and we're going to figure this cost of finished goods manufactured. Okay? So, move my sheet up a little bit. So this is cost of finished goods manufactured, and so work in process beginning of the year is 8,000. And then we're going to add manufactured costs assigned to production, and we'll kind of put those numbers off to the left. So we got direct materials used of 235,000. We've got direct labor used of 210,000, and our manufacturing overhead of 420,000. Okay, so we'll bring the total of those numbers over to the right, 865,000, and that is your total manufacturing costs. So you want to add the 865 along with the work in process at the beginning of the year, so that number's 873. Again, that is your cost of goods in process for the year. And you're going to subtract your work in process end of year, 10,000, from that number to come up with cost of goods manufactured of $863,000. So that's your cost of goods manufactured statement. This is something that you would normally see in, not in the for financial statements, but you would see something like this in the notes to the financial statements for a manufacturing company. Okay? All right, so again, problem 16.5a is very similar. You should be able to take what we've done here and take the process and figure out the answer to 16.5a.